If you hold Ripple's XRP, many people are saying that it has been planned all along for over a decade for the new financial system that's coming up. In this video, I'm going to discuss a lot of things that you need to know, such as what's happening for Bitcoin right now and what is about to happen next over the next few months leading in towards the tail end of this year. We're going to discuss what the Fed is most likely to do next for their FOMC meeting to adjust interest rates to combat inflation, because with inflation coming down, is inflation going to continue to trend down, or is it going to rear its ugly head back again and cause the purchasing power of your dollars to go down in grocery stores? So if you're saving dollars and you're not investing in crypto right now, or you're scared because crypto is going down, I have to paint a long-term picture for you guys compared to the stock market, comparing to Bitcoin, and then talking about the origins of Bitcoin and how this relates to Ripple, how this relates to XRP, how this relates to the International Monetary Fund, the Bank of Iraq, and many other banks out there that is going to completely shock everybody in today's video. So we got a jam-packed one for you guys. Comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. We have a big update to start this video off for the Ripple vs. SEC lawsuit with Brad Garlinghouse and Gary Gensler having a confrontation here on the street. Let's check this out. So who's going to get the last laugh here? Will it be Ripple or the SEC? I think everybody knows the answer to that. In real news here, Ripple has contested the SEC's request for a $2 billion fine related to XRP sales to institutional investors, claiming that most transactions were lawful and informed. Instead, Ripple is proposing a maximum fine of $10 million. And if they agree on this, the case could be closed very, very soon. So this is coming to an end. And when this ends, this will bring positive news to, XRP, even with the rest of the market selling off right now in the short term. Nothing out of the ordinary here. I talked about this in yesterday's video. Bitcoin's support at roughly $60,000-ish right here. We can see on Binance, Bitcoin to the USDT liquidation heat map. The most amount of leverage right here to the upside is roughly 67K. And then we see up here at $71,000. To the downside, if we break this support floor right here, Bitcoin could drop all the way down to 52 to 50K. To liquidate all of this leverage right here, it looks like there's about $1.7 billion-ish, around $50,000. So, to liquidate these traders and these limit positions would be like $48,000. So if Bitcoin drops below 58K, then in my opinion, we'd be coming all the way back down to $48,000 to $50,000 really quick. And we would wick down within these zones, liquidate all these traders out here, and then bounce back on out of here and start the recovery. If we look at the Bitcoin stock to flow model right here, and we compare it to the past, I brought this up in so many different videos, but it's playing out very similar. I talk about a rally up through the stock to flow line and a sell-off going into the halving. That's exactly what we saw happening. But this sell-off may not be over yet, but I do have good news for you guys, because when you're in doubt and you're in fear and you're scared that your portfolio is going to go down even more, zoom out. When in doubt, zoom out. So when we zoom out and we look at the macro, from 1400 days until Bitcoin's next halving now, we go from purple, dark purple, to red. And so now that we flipped red right here, let's compare to the past bull run cycle and what happened. So we saw a sell-off before the halving. It was a black swan event, so it was a lot deeper of a sell-off. Bitcoin was on its way upwards of $10,000 to recover, out from this dip that brought it down to about 6,800-ish, somewhere around here, 6,600. And it was going to keep going up, but COVID happened. Whether it was planned or not, I'm not going to discuss in this video. I'll let you guys debate that in the comments below, but everyone knows that war and pandemics, they're good for business. And so regardless of that, we started working our way out of here. Once the halving took place, you can see when it was about 1,400 to 1,200 days until the next halving, we just consolidated sideways. Broke upwards of $12,000, one final back test, then from orange to yellow, went absolutely parabolic. Now let's look at the bull run cycle before then in the halving and see what happened. We saw a rally up into the halving. Then we saw a sell-off going into the halving. So it was a rally before the halving, sell off into the halving, consolidate sideways. Once we turn from red to orange, we just consolidate sideways. Then we break out of here from orange to yellow. Let's go back to the halving before then. Rally before the halving, sell off going into the halving. And then once we turned red, we just consolidated sideways. So if I were to bring each of these up for you guys, and you just look at the red, okay, just focus on red here. Don't focus on any other point on the chart. Just focus on red. What happened here? We bobbled sideways, consolidated sideways, then broke on out of here. What happened when we turned red here? Went sideways, then broke on out. What happened when we turned red here? Went sideways, then broke on out. So is it possible that we do the exact same thing? Again, I think the likelihood is high, unless there's a black swan event. Now, we can't put that past, the governments of these countries to plan something like that, to shake everyone out through some type of war news. Something like that is what I feel would happen, but we don't know, right? So the people that are privy to that information around these closed door meetings, and what we can focus on is what the Fed is going to do next and how this will likely affect the market for the rest of this year going into 2025. So the FOMC meeting, where the Fed discussed interest rates, among many other things about the economy, is scheduled to take place in about 17, almost 18 hours from now. And so when we look at this, we click on May right here, 98.9% are expecting them to keep rates current. They're not going to raise them. They're not going to lower them. So the majority on the CME group are expecting just flatline again, for how many consecutive months in a row. Now, if we go to June of 2024, this summer, 89.5% are expecting the Fed to keep rates steady again. Only 9.5% are expecting them to lower rates. So at some point, the Fed could lower rates, but when will that happen? Well, 76.7% are expecting them to keep rates steady again by July, and only 21% are expecting them to lower rates. By September, this is where we get to the numbers changing a little bit and the odds increasing in favor of a cutting. 37.8% versus 53.9%. 53.9% expect them to keep them steady. So by November, it's pretty much splitting percentages here between lowering and keeping them steady. So potentially by November, then December, 41.6%. The odds are tipped in favor of them lowering. So towards the end of this year. So this is still so far out for the Fed to lower rates, unless Jerome Powell comes out and says, something shocking to lower rates or something happens. They're most likely going to just keep rates steady. And it's not when they raise rates that the markets panic. It's not when they pause rates. It's when they drastically start cutting rates, as I talked about months ago. The last times that they drastically cut interest rates, and started decreasing them rapidly, is 2008 and 2000. The last two times were massive market crashes. And so if they, for whatever reason, just start rapidly cutting rates like December, January, February, March of 2025, quarter four of 2024 and early 2025, then that's what could cause the big one, guys. So we need to be ready for that. So going into that, I think we're going to have a rally up before that happens. And so inflation says between 3 and 4%, but reality is it's around 7% of real inflation for goods and services, not even including price gouging in stores for these businesses that take advantage of inflation, like Walmart. They jack up their prices on different things because everyone sees all these news headlines of inflation, prices are going up. So these businesses, smart businesses, they just double charge on a lot of their stuff to completely wreck the average everyday consumer like you and I that's going into grocery stores to buy stuff. And so how do you become free in this matrix? What do you do? Well, there's only two ways, in my opinion. Let me know if I'm wrong in the comments below. If I'm right, give this video a like, subscribe to the channel for more, because I want to bring you guys lots of different data in this video, and we're just getting started into Ripple XRP news here soon. But number one, how do you get free in the matrix? You have a business where you call the shots, where you don't have to report to anyone, where you can't get fired. Because if you show up to work, if they cut your check, they can cut you off, okay? Now, a lot of people don't like to hear that because that's the truth. People want to live in a lie, and they want to live in the term, two words, job security, which is not true. Job security is as real as the Easter Bunny. You could be fired at any moment because a company could go out of business. But if you start your own business, you start your own side hustle, you start your own enterprise, whatever you want to do, yes, it's harder, but that's how you can call your own shots. And the volatility is going to be there too for income, obviously. It's not easy, because if it was easy, everyone in your family would be a millionaire. But when I say confirm that you're going to become the first millionaire in your family tree by commenting 777 below, how do you do that? We have to start a business. You could do that in anything. You do it in real estate. You can get started in affiliate marketing. You can get started in network marketing. You can get started in solar sales. You can get started in health and nutrition products. You can do whatever you want. There's lots of different ways to be able to, start something. So you just have to start. Pick what you're passionate about and do it. I'm not here to give you a lecture and to teach you guys what to do for that. I've tried a lot of different things from, selling cruise line subscriptions, memberships, selling solar, learning about e-commerce, doing all that, doing affiliate marketing, doing network marketing. You can learn about trading. If you go to bullrunners.com, we'll show you guys our top way to be able to make money online, to create more passive income for yourself over the next few months when we launch our crypto education platform. But that's number one. You need some type of business model to create income on the side of your job yourself through that, because formal education will make you a living, self-education will make you a fortune. And unfortunately, people aren't self-educating themselves because they're numbing their brain with Netflix shows. But you should be spending more of your time personally developing yourself on where you need to be. So that's number one. Number two is you got to invest. You got to invest. So you got to move over to the right side of the cash flow quadrant. The left side of the cash flow quadrant are employees and, small business owners, right? But they basically own a job, so they're trapped by their business. You want to become a big business owner. So you start a small business, then you expand it to become a big business. And then you have investors. And so a lot of people skip the business owner side of things. They think that they can just take the income from their job and they can invest it. And yes, that's a great start. But if you don't have a business and it takes longer for the markets to do well, and we see a 1929 crash that takes 10 years, 20 years to recover in the crypto market, in the stock market, in the real estate market, the big one, right, that's going to be coming here soon. We don't know when it'll happen, but it's going to happen. There's a 100% chance that a big crash is on the horizon. 100% chance. Why can I be so confident? Well, there's a 100% chance that winter comes every year, right? There's a 100% chance that fall is before winter. There's a 100% chance that spring is after winter. There's a 100% chance that summer comes after spring. The financial markets are no different because we live in a matrix, right? And so the seasons of life are just the same as the seasons of health. They're the seasons of relationships. They're just like the seasons of investing. It ebbs and it flows like a frequency of your thought frequency, of your heart frequency. There's a frequency and sacred geometry in the charts that we can get into. And that's what Fibonacci retracements are. And that's what golden ratios are based off of, lots of different stuff. And so I'm not going to get too much into that right now, but the main thing to understand is that if you're skipping the business owner side of things and you're just going from employee, your job, to be an investor, then you might have to wait years or even decades for the markets to recover if there is a crash. That's why I encourage you to start a business, learn about building a business, learn about affiliate marketing. If you guys want to see one of the best ways to make money online, go to bullrunners.com. We'll teach you. We'll help you out. But I digress, and we need to dive into the other aspects of this video. But let's get into the technical stuff and let's talk about what's happening, because the Fed has been pausing rates since like September of 2023. So when they start cutting rates, that's going to directly affect interest rates for taking out a 30-year fixed mortgage on a house. So a lot of people right now aren't buying homes because interest rates are too high. And so why would you take out a 30-year fixed mortgage at 5.33% if you're hearing about the Fed's cutting rates soon? Now, people that are trying to sell their homes, there's not many buyers for that. And so the people that are buying the most homes right now are companies like BlackRock and the massive institutions that can just gobble up everything. So when you've heard of the saying, you will own nothing and you will be happy, it's because the rich get richer by investing their money, having big businesses, and controlling the peons at the bottom of the hill, right? They're at the top of the hill because they understand information that the average people, it's not that they don't understand, it's that they're unwilling to learn because they're lazy, right? Because they're just sitting eating ice cream, watching Netflix. And hey, that happens to the best of us. I'm not saying you're a bad person for doing that. That's just the truth, right? Because what does Larry Fink, what did he spend his time doing, right? Researching lots of different stuff and becoming smarter than the average bear. And so you don't need to be Larry Fink, you don't need to be this Wall Street person here, but you do need to educate yourself to preserve and protect your family and be able to create freedom for yourself. And so when they start lowering interest rates, that could cause all sorts of chaos in the markets. You guys saw what happened back here from like 1955 all the way to 1981 when they would raise rates, drop rates, raise rates, drop rates, raise rates, and then drop rates. Well, all the way back here, if we look recently to what happened when they paused rates from 2006 to 2007, and then they dropped rates. Well, from 2007 to 2009 is when the stock market crashed, when they were dropping rates. Before then, they raised rates up until July of 2000, paused them until like December-ish, right? Like November, December of 2000. And then in December of 2000, started dropping them from 6% all the way down to 1.73%, and ultimately 1% by May of 2004. This was the dot-com bubble crash. So if they start rapidly dropping rates towards Q4 of this year, at the end of this year, that's when I would expect a big market crash to take place in the stock market and in the crypto market. Now, I know you guys are thinking, well, isn't crypto bullish? Like, isn't crypto going to go up? Yes, I do believe that will happen long term, but the next big crash, guys, for crypto, if we see Bitcoin start pushing upwards of 60K, then 70K, then 80K, then 90K, which I believe will happen at some point this year, I believe it'll roll around and have a much deeper correction on the other side. Now, if we compare Bitcoin to the Dow Jones Industrial Average right here, Bitcoin is somewhat following the Dow. As you can see, when the Dow broke out from October of 2023, that's exactly when Bitcoin started breaking out and rallying upwards of 47K. Saw a little correction here, but then ultimately rallied upwards past the all-time high. Same thing for the Dow. The Dow rallied past the all-time high even before Bitcoin rallied past its all-time high back in early December. And with this recent correction that's taking place for Bitcoin around the halving, the Dow is seeing a correction. So Bitcoin is operating more like a stock right now than like a store of value. And so what the stock market is going to do, specifically the Dow Jones Industrial Average, Bitcoin is more than likely going to do. So if the Dow has already, seen its peak and we see the Dow continuously trend down, I would expect Bitcoin to continuously trend down. And so if we see a back test of the all-time high, which is roughly around 37,000 for the Dow, we're at 37,800. So to the downside, what would that look like? I mean, that would be like nothing too crazy, because the stock market, the Dow's not as volatile as Bitcoin, but another 2%, whereas that could hit Bitcoin even harder, where Bitcoin could drop down another 19, 20% for a much deeper correction. So I just want to encourage you guys just to be prepared for this. That'd be like a 30 to 40% correction for Bitcoin. If we come down to 45,000, it's like a 40% correction for Bitcoin. And so that could happen. I'll just be accumulating more crypto if that were to happen. That wouldn't scare me, because I know what's coming next over the next 6 to 12 months. And it would take some sort of economic calamity for that not to happen. And in which case, everything gets wrecked, right? If the stock market implodes and goes down, crypto would go down, real estate might go down as well too. Just everything across the board would get hit. And so it's better to play the odds that are in our favor right now of the Fed printing more money. 100 times out of 100, the Fed, 100% of the time, the Fed is going to opt to print more money than default on their debt. And so if the debt ceiling, once we hit the debt ceiling again, Janet Yellen's going to come out on interviews and say, I urge Congress to raise the debt ceiling and we need to act now. Otherwise, the government won't be able to pay their bills. And then they're just going to go and print trillions more and add to their balance sheet. So in short temporary times where they start tightening on their balance sheet to fight inflation, eventually, it builds up pressure, something breaks, and usually that's like a bank failing. You saw that happen with Silicon Valley Bank, or multiple banks failing, and then they step in, they buy the bad bonds, they bail the banks out, they add to their balance sheet, and when that happens, crypto and the stock market pump. And that's what we saw happen for, Bitcoin last year, is when Silicon Valley Bank dropped, right, pumped down to Chinatown, then Bitcoin pumped up. And so there will be more bank failures, and that will cause a fear in the banking industry to withdraw cash and start putting it into crypto and the stock market. And so I would expect stocks to go up. I would expect Bitcoin to go up. And then, I expect just real estate to keep climbing because there's a finite supply of it. But here's an old picture, according to Ito Farina, of Satoshi Nakamoto working on the prototype known as BTC, beta test coin. Years later, the XRP ledger was created. The final product, the real currency that solved everything, Bitcoin wasn't capable of. And so, as you guys know, this is David Schwartz over at Ripple. And so people are saying that he's the creator of Bitcoin. Is that true? Do you guys think that? Because he worked for the NSA. And back in 1996, there was a document called How to Make a Mint. And it referenced some guy named Tatsaki, or whatever his name was, Okamoto, very similar to Satoshi Nakamoto. And so Dan Pena says Bitcoin is going to go to zero because he knows who's behind it.
And I know who's behind Bitcoin. And it ain't some Japanese guy in a cave. I know the guy. And when that comes out, you heard it here first. Bitcoin is going to zero. Zero.
If he knows who's behind it and he thinks it's going to go to zero, it'd more than likely be the NSA, because that goes against exactly what people want in crypto, which is decentralization. And Bitcoin would be the most centralized project out there. People don't know who the owner is, and there's a cloud of decentralization, but there's not a fact of decentralization because we don't know who the CEO is. And whoever comes out and says that they created Bitcoin as a fact, that's what could scare people out of Bitcoin into a project like XRP. Now, Ripple they're excited to announce a partnership between Ripple and Hashkey Group and SBI Group, ushering in XRP ledger-powered solutions, starting with supply chain finance to Japan's entire landscape. Now, in 2023, Yoshitaka Kitao, the CEO of Strategic Business Investor Group, SBI, a leading financial firm, commented on the influence of XRP, disregarding Bitcoin as an asset. He forecasted that XRP would be used by every bank in Japan by 2025. And so if you guys are frustrated right now that XRP isn't doing anything, well, 2025. If nothing happens in 2025, then yeah, maybe we pack up shop here and move on to something else. But can you have patience for a little bit longer? Can you wait till 2025 and just, sit in the truck for a little bit, sip on your coffee, take a little nap here, subscribe to the channel, and watch these updates? Because look at this, XRP partners compared to Bitcoin partners. Now, obviously, people are going to say, like Crypto J, this is not the same. You can't even compare. There will never be anything like Bitcoin. XRP is a blockchain company with an owner. Bitcoin is freedom for the people, but nobody knows who the owner is. So if the owner is the NSA and it was a social experiment and it's the beta test coin and XRP is the final product, then what do you think all of the Bitcoin bulls are going to be doing? Now, I can't confirm or deny that. Obviously that's a hypothetical. We're not going to debate too much on that because I like to talk about facts. But here are the facts. Look at the amount of partners that Ripple has. It's absolutely insane. It's undeniable. And these are all on document. Now, the IMF is working with Ripple to utilize XRP to disrupt the financial system and create a clean slate system. So Ali G posted this on Twitter. This thread breaks down that vision, and it's well worth the read. And if you look in this picture right here, you could see the chief data officer at MAS. You can see Christine Lagarde over at the IMF. You can see Chris Church with Swift. You can see Brad Garlinghouse with Ripple in this photo. You see Jesse Chang at the IMF. FinTech Council used to work for Ripple. And this picture was taken at the Singapore FinTech Festival. Why would all these people in suits be getting together to take a photo randomly? I don't know. Maybe they're planning something. What could they be planning? Well, let's start by outlining the following. Ripple was selected to serve on the IMF's High Key Advisory Group on FinTech. Chris Larson, the executive chairman of Ripple, being one of the 19 members, alongside the chief executive officer over at Circle, USDC stablecoin, and many other massive players in the game, from the Monetary Authority of Singapore to the Bank of Indonesia, to the Bank of Canada, to even the US Treasury. And Christine Lagarde, who's the managing director of the IMF, publicly stated that Ripple and Circle are the best choice for banks to build upon.
The difference will not be between those who are disrupted and those who survive, but it will be between those who are cannibalized because they are not seeing it coming and they're not embracing it, and those who self-induce that cannibalization. And I'm using cannibalization on purpose because it's a bit of a striking, horrible word, but it's really what it means. It's you're going to disrupt your business model, you're going to change it, you're going to reduce your cost, you're going to expedite your transactions, and you're going to continue to inspire confidence because you will build that on the basis of an existing backbone, which is your bank and the confidence relationship that you've established with your customers. So that's where I see changes happening now. If you think of Circle and Ripples and all those, that's where they are active and
In a while back, this video came out with Brad Garlinghouse and one of the head of the legal department at the IMF. When he asked him this,
you want to take one? Go for it. The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I I don't want to go into great details about
Maybe
the
I should take what the IMF is going to do.
Now, if you study anything about reading body language, clearly he couldn't say something due to potentially an NDA, private agreements behind the scenes to not announce things until they're ready. But the IMF working with Ripple, it's pretty clear there's something going on there that they can't tell the masses just yet. Now, here's a video of Brad Garlinghouse presenting XRP and the XRP ledger to the IMF and Swiss National Bank.
Our view of the future is you don't have to have this pre-funding, and instead you can use a digital asset to have global liquidity on demand. Now, we build upon a tech stack, an open source technology called XRP. XRP originally was built by some engineers who had seen some of the flaws of Bitcoin and the challenges of scalability around Bitcoin, where Bitcoin today, per transaction basis, it's rather slow and rather expensive. XRP is very, very fast, about 1,000 times faster per transaction and 1,000 times cheaper per transaction. The other dynamic, of course, of correspondent banking is some of the more quote unquote exotic currencies, exotic corridors have been left to kind of stand on their own. And the liquidity in digital assets could be applied to actually make that much more democratized and a level playing field. Ripple's vision from the beginning really has been to apply these technologies in the same way that TCP/IP and HTTP are the technologies underpinning the Internet of Information. These blockchain technologies will be the underpinnings of an Internet of Value, where we have connected devices, we have connected information that will allow payments to flow. And as Norman was describing, if you're a large corporation moving $100 million, that's one thing. If you're a freelancer working in the Philippines doing design work for a company in London and you want to get paid $30 or 30 pesos, Philippine pesos, that's not a transaction that can easily be enabled. And in fact, for the companies that enable that, they require the freelancer to set up an account and they don't actually pay it out until there's roughly 1,000 USD sitting in that account, and then they would pay it out.
Now let's lay down what the vision with XRP and the IMF is. The central idea is still built around an international, non-national currency, and XRP could just fit that bill. It already does in a lot of different ways. The IMF acting together with the World Bank as a central bank for central banks could use XRP as a settlement means between the banks of the world while keeping balance along with bilateral relationship. And Lagarde didn't come out and speak overtly about XRP adoption directly, obviously, because she can't yet, similar to how like Ross and Brad Garlinghouse, they couldn't say if the IMF is going to hold crypto assets in the future, but she said a series of ideas in which XRP would fit perfectly as the system's working currency. So hinting at it, and besides that, Ripple is already working alongside 40 or 50 of the world's central banks. So it's already developed a collaborative network that would allow it to take center stage if the old Keynes plan should become an option again for the IMF. And so while they're not directly saying it, I think it's very, very clear. You guys could read between the lines here. The IMF's leader has singled out Ripple in the past, calling it a disruptor, for instance, above other digital assets, which shows that she's very well aware of Ripple, its technologies, and XRP. So it only makes sense for the IMF to take advantage of XRP's already developed network technology and reliability to bring forward the next world's financial system. Now, the vision is to have XRP effectively be an ESDR, which is an e-special drawing rights between multi-currency corridors. And XRP is the only cryptocurrency with functionality and features that can facilitate transactions in this nature. And in a working paper, we brought through the Bank for International Settlements titled Trust Bridges and Money Flows, a digital marketplace to improve cross-border payments, published by both the IMF and the BIS. In the document, it concludes that a settlement asset for cross-border payments does not currently exist. It also states that XRP would be suitable for this, and a shift towards digital money is needed to improve cross-border payments. And in another paper published by the IMF, it states that CBDCs could simplify intermediation chains and increase availability by starting a clean slate system designed to achieve interoperability between different jurisdictions, allowing for real-time payments. And as you guys know, Brad Garlinghouse loves that word, interoperability. And in the same paper, it goes on to say that the IMF is working on a concept for global interoperability. It states that CBDCs would require a common standard of interoperability agreed upon by multiple central banks. Now listen to Daniel Eden from the IMF, SWIFT CEO, Bank of America CEO, as well as others talking about this interoperability regarding CBDCs.
Singapore, France, and Switzerland, and pooled their CBDCs in a common kind of offshore pool that was an automated market maker. And in that automated market maker, all the currencies could trade against each other.
Interoperability of economies actually connect more than 200 countries, and particularly their payments and securities infrastructures with each other.
The ability to enhance each other's understanding, the ability to connect the diverse economies, 200 or so countries in the world, and make sure the payment system works for all different profiles of companies.
And fairer, we need systems that connect countries. In other words, we need interoperability.
We do want to have an open and interoperable system. Central bank digital currencies are not constructed to be interoperable.
Interoperability between central bank digital currencies
is very much there needs to be interoperability globally. And even in a world of CBDCs, you still need interoperability to solve.
It has to work interoperably with anyone, anywhere.
And fairer, we need systems that connect countries. In other words, we need interoperability.
So at Ripple, what we are doing is focusing on building out that DLT international.
And what's interesting is that a document from the IMF states that Ripple has a cutting-edge CBDC platform to be able to facilitate interoperability. And in another document titled The Rise of Payments and Contracting Platforms published by the IMF, it states that proof-of-work Bitcoin, distributed validation, and proof-of-stake Ethereum are not scalable, nor are they efficient, and Ripple and XRP are the scalability solution to new forms of digital money. And that's the CEO of Circle, Jeremy, publicly stated this.
Really close. I mean, USDC itself we've seen over $3.5 trillion of transactions directly on the internet between counterparties. And so if we can, improve it with more scalable blockchain technologies like, Brad's company provides.
Now, the real question is, why will this bridge currency be XRP and not another alternative? Because nothing can beat XRP's capabilities. SWIFT, which currently processes about 75 to 80% of cross-border transactions globally, has even publicly stated that they will not be creating their own version because it would be in competition with XRP, especially stating they would be pointless to even try to compete because, XRP is just years beyond them. And the IMF has also illustrated RippleNet in one of their documents on supervision of financial market infrastructures, resilience of central counterparties, and innovative technologies. You can see right here through retail payments and wholesale payments that goes interbank between CHIP, CLS, Fed wire funds, Fed accounts, and underneath exchanges on DLT, distributed ledger technology platforms. Examples they use: RippleNet, IBM Worldwire, Centrace Stablecoin Network. So I know there's a lot of information, but here's where this gets juicy and where this actually gets interesting here, if it wasn't yet already for you guys. If I'm boring you, if I'm putting you to sleep to help you become, not just a millionaire, but a multi-millionaire here over the next few years on what we're holding here, because yes, I do hold some XRP. Quick disclaimer, I'm only going to share with you what I believe will do well, right? If I hold something and I talk about it, my goal is to help you guys make money, but I'm not a financial advisor. Go consult your financial advisor. These videos are purely for education, informational purposes only, and obviously crypto is very, very risky. You could lose all of your money, so proceed with caution here and always do your own research. But Trust Bridges and Money Flows, a document published by the IMF back in 2023, it states that a third currency could become the vehicle currency on a marketplace. The transacting process involves trading currency A for currency B using currency C to facilitate this in the middle. Now, this is exactly what the payment flow for, XRapid, which was designed to utilize XRP to do so. And what's interesting is that Ripple presented this payment flow using XRP to the IMF back in 2018. It was confidential information at that time, but it was for bidirectional messaging for real-time settlement. And XRapid, for their liquidity solution, leveraging a digital asset for reach to new corridors. Some of this is cut off in the picture, but enabling global reach without pre-funding through Nostro and Vostro accounts. And also at the end of this, the document states that a settlement asset such as XRP arises as a suitable model. So by this point in the video, it shouldn't be a surprise that Ross reacted the way that he did, being asked by Brad Garlinghouse his thoughts on the IMF holding crypto assets. Now, Stephanie Starr did some more digging to confirm some even more juicy information for you guys, with the National Bank of Iraq going live with Temenos core banking and payments. So Temenos has been a partner of Ripple since about 2016, and Temenos is partnered with Capital Bank Group, which includes several large banks like Capital Bank of Jordan, Bank of Audi at NBI Saudi Arabia. And Temenos' partnership with the National Bank of Iraq is now live as of April 25th, less than a week ago. And NBI also adopted Temenos' payments. This enables the bank to process more than 100,000 transactions of incoming and outgoing domestic and international payments in the first 15 days of operation with a 99% straight-through processing rate. And implementation was completed in less than 12 months, which is very, very interesting because what happened less than 12 months ago? Well, the IQD was paired with XRP as of July 4th, 2023. So this falls in line with the upgrades Iraq has made to support its electronic payment initiative last year when they partnered with Starlink for internet services. As of March of 2023, they added close to 2,000 additional ATMs with 1,000 more scheduled this year, and businesses are now hooking up with POS terminals and using QR codes. And the banking and finance industry now makes up to 25% of their GDP. And the PM of Iraq visited Washington, D.C. April 15th to 17th to discuss financial reforms and modernization for a prosperous Iraq. And while in DC, he gave an interview where he was asked if the government was thinking of revaluing the dinar. His response was the banking reforms will raise the value of it. And when we look right here at the IMF's high-level advisory group on finance and technology, we can see Jeremy from Circle, we can see Dr. Long Cheng from Alibaba, we can see the People's Bank of China, Monetary Authority of Singapore, Christine Lagarde from the IMF, and notice how Ripple's executive chair and co-founder Chris Larsen is right there smack dab in the middle. I don't think that's a coincidence, guys. So I think we're beyond the point that they're planning something big here. I think it's obvious. It's right in our face. You can't deny that. I've just proven it in this video from lots of different points that we've uncovered on Twitter from these amazing creators. And I'm just here to bring you guys the news. But the real question is this: did Ripple's founders plan it all from the beginning? Because according to Jim Knox, he asked this question. I'm really curious here because this got me thinking. Did you know that the XRP ledger had hundreds of wallets named after big companies? You know, I'm not sure if the XRP community is aware of this yet, but it's something worth looking into. So take your time. Check out this post on Twitter. You guys can go follow him, and don't forget to bookmark it so you can refer back to it when you're done doing your research. So how it began? Well, in 2011, Jed McCaleb saw problems with Bitcoin, like slow transactions and high fees. If you guys transfer Bitcoin, you know how long it takes. That is a unfeasible solution for cross-border payments. And he decided to create a new digital currency, XRP. He teamed up with Joel Katz to start a project called NewCoin. They also brought in A.H. Brito. Although no photos of him exist, the project gained traction, and Chris Larsen joined as the first CEO in 2012, initially called NewCoin. The company was later named OpenCoin and finally became known as Ripple in 2013. And now that we've delved into the project's history, let's shift our attention to the XRP ledger, which evidently was planned long before. And this will uncover some of the connections. So the start of the XRP ledger, looking back at the XRP ledger's early blocks, we can see that initially there are 3 connected wallets in pick number 1 right here, which later split into more. And that's Arthur Brito, Bitstamp, Hot, and then Coastline. And to be honest, he couldn't find much more information about the wallet named Coastline. However, a deeper look into the activities of this wallet suggests that Ripple had big plans from the start. So it appears that either they or somebody else set up wallets from 2014 for virtually every major company worldwide, really big names from gateways over banks to financial institutions like Bank of America, ECB, American Express, Fedwire, and BlackRock advisors, to Coca-Cola, Amazon Web Services, with an amount of 33 XRP in each of these wallets. So do you guys think that they were doing this for demonstration purposes, or were they loading and pre-funding these wallets, getting ready for these companies to adopt this sometime in the future? Because this was over 10 years ago. So they've been planning this all along, and people that know what they hold, they aren't worried about short-term temporary drops in the market. But if all you hold is XRP, that's also not a very smart move, because I personally do believe other projects will outperform XRP in the short term, but in the long term, I'm very, very bullish on XRP, and that's why it is one of my largest holdings. However, if you do want to see other altcoins that I'm bullish on that I believe will do very, very well over the next few years, then make sure you subscribe to the channel and check out bullrunners.com. The link will be in the description below. You can get exclusive early access to our underground guidebook for discovering 100x altcoins. Even if you have no crypto trading experience, all you need to do is click the link on the page, put in your best email address. You'll be instantly subscribed to our daily video newsletter where we provide you with the best information to help you prepare for the worst that's yet to come in this economy, because we believe that the spending power of the dollar is going down in value. That's a fact based on inflation, blockchain technology, distributed ledger technology, and cryptocurrencies are going up in value. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. I will see you guys on the next video. I will see you on bullrunners.com. Right now, as always, you know what to do. Stay bullish.